Hello, Warriors. Hope everyone had a great weekend. Let's go to work. Dollar making new lows for the move. Hi, AJ. AJ, how are you? Blake, Steve, Mike, Ingmar, Kman, you too, buddy. Hugo, John. Okay. So I was going to start off with Ryan because he had a 115 area in the Euro. So I'll start with his partner.
Mm-hmm.
Good
Yeah,
morning, K-Man. How are you, buddy?
yeah, very good, very good.
So what are you thinking up here with new lows for the move in Dixie?
Confidence crisis. There's only one word. You can stick a lot of labels on it and or find a lot of reasons, but
A
it's a
crash?
confidence crisis. Yeah,
Yeah,
I mean,
yeah,
if it's internal now as well, Dale, as well as external. So I see a lot of people moaning about, or having fears about supply chains and everything, and
yeah,
the way that everything has been done. I and we have been warning about this several times, and it's just happening and ongoing. Yeah, I don't
yeah.
see what it's. Well,
What would
yes,
stop it?
well, a reversal of everything. But the problem is, and that's what I've been talking about over the past weeks as well, is that the way that it's been done has driven a lot of trade partners into each other's arms, and
Right.
not the US. So if you first negotiate with non-US and then only see what's going to happen afterwards, this is what you get. And I think all those. I mean, there's of course one big reason. It is the Trump and his administration, but there are many reasons inside, and the bulldozer way that he went on with tariffs, the way that the Dodge is getting rid of administrations, just killing numbers, it seems. And then the end of the last week. Openly admitting ways to weaken your own central bank. You're not talking about the central bank of Morocco here or Tunisia, with all due respect to those people. You're talking about the Federal Reserve. And I think a lot of people were shocked with how everything is going over the first two couple of months of the tenure and the first weeks of the tariffs and or the first month, and it's just a shocker for everybody who is outside of the US and now even inside, and I don't think what's going to reverse it. To reverse all of this, they need to scramble back on everything. But how quickly are you going to get confidence back? We know that it takes years to build confidence and one day to
Yeah,
lose. Well,
yeah.
they might as well start to rebuild right now because it's otherwise it's going to get really ugly.
Okay. So, just so the way things are, you're not being negative. You're talking about, I mean, this run in gold.
Yeah.
I probably haven't seen anything like this since 1979.
Mm. Yeah,
I mean, and that was Russia and Afghanistan, and
yeah.
and
I
go,
mean,
you know,
but
so
it's. I mean, I called it potentially the trade of 2025, but I mean, it's even happening faster than I thought. But it is. This is what you get, if you can't buy much else, you buy gold, you buy. It's what I've been talking about in our room as well. You buy if the biggest block doesn't doesn't suit you as an investor, you buy the next one. So that is why the euro is doing so well as well, because still there's a lot of people reluctant to, for instance, buy the third block or so, China. But they do probably buy a bit of yen and the rest. But yeah, you refuse in stuff that has value when all the rest goes to crap.
when you think about it, it's just this is where the euro was in April.
Mm,
This is where it is now.
yeah.
Made huge, huge, huge advances, And even though we're weak here, which makes me think maybe the dollar is supportive, I mean, the stock market's
Mm.
way off those April lows.
Yeah,
So I mean, I think the weaker dollar is cushioning equities right now, at
perhaps.
least. What do you think?
Yeah, perhaps.
Or we'd be here. I
I,
mean,
I,
if
yeah,
the
that is true. That is true. That is one that perhaps is not yet or not completely falling out of bed. Perhaps that is still the result of the pandemic. Still a lot more cash in the system than there was before.
yeah,
And people, if you're American and you do not, how shall I say, it's not in your playbook to diversify outside of America. Maybe that is just what is happening now. But you see things like the Dow Jones. They're regularly getting hit, and the Russell as well. Russell should have been one that should have been supported through this whole thing, and it's not right. So yeah, but it's all those things, they are coming in waves. We have seen a big wave into risk at first. The euro was still getting hammered, and then the tariffs came, and then the euro rallied like what is it now, 7-8% or so.
yeah,
Um,
10.
yeah, nearly 10. Well,
Yeah.
yeah,
Oh
10.
yeah.
If you look at it from the lows, it rallied
Yeah.
13%, but then we were still trading that positiveness ahead of the inauguration and through the inauguration. But yeah, since it's rallied 13%, this is not good. I mean, you can turn it as you wish. The thing is that Trump and he wanted a lower dollar, but this is not the way he wanted a lower dollar to export. This is a lower dollar because people lose confidence.
Yeah. Could it be as simple as even with the weak dollar,
Mm.
that stocks are a better hedge than bonds in the dollar crisis? I mean, the bonds like TLT looks like we're headed for the lows
Yeah,
if we
yeah,
don't
it
dig in
does.
our heels here. And under 85, man, there's air. There's
Yeah, I
air
know.
under
Yeah, yeah, yeah,
85.
yeah, yeah. Yeah,
You
and
know?
I still think there will be another wave in this. I mean, we're probably going to continue this for a while, for as long as the people get out. You know that we all know that there's so much money, and if you look at the even not like even the central banks, but if you look at the big asset managers, the biggest money managers, they are. I mean, BlackRock is above $11 trillion. Vanguard is
Yeah.
above $10 trillion. It takes time to rebalance. So I think yes, there could be a low coming in bonds. There may still a big wave out of equities as well. But I mean, to come back onto the bonds, I think once we are going to see the end of this wave, and I don't know when that is. I think we are going to see a massive reversal, not because people are buying bonds, but just because everybody,
Posi Positioning, everyone's on one side of the boat.
yeah, the speculators will be on one side of the boat, the rest of the asset managers or the big money will have sold everything that they wanted to sell, and then the market is, in my opinion at least, all of a sudden going to turn around and say like, well, okay, now we focus our attention on the growth part of this whole thing, and growth is not doing well, and then all of a sudden you may see actually. And I don't know from where, I really don't know. I mean, the US tens could hit 5% again if the people really need to get out of more bonds. But then all of a sudden you can find yourself back at 4% or 3.5.
Yeah.
And that will probably be where, um, bringing it back to the dollar, where the dollar will have its worst moment, and then I think we will be at the bottom of or peak negativity. But I mean, I don't think we're at the end of it right now.
Okay. Let's see. Okay,
and in all those things, you can, I mean, then you look at gold. I mean, if really yields would turn around, gold, I don't know where it's going to stop. Really, I don't know where it's going to stop. This could hit 4, 5,000, 6,000, perhaps. I don't know. But unless something steadies the ship.
okay, I think it's going to be the something that's going to have to steady is this to steady the rest of the ship.
Who who
Uh,
is who is who
huh?
is going to study it? That's my question right now. Who is going to study it? Um, I mean, yeah, I mean the guys and the girls at the Fed are now getting scared that they are going to lose their job as well. I mean, who is going to stop? Who is going to steady the ship? Is it Trump completely crawling back and realizing that he's doing more bad for the U.S. economy than U.S. economy than he thought that it would be beneficial? I just wonder who is going to stop it.
I think it's got to be the Fed, but it could go on for a while. Like I'm
Well,
saying,
well, and,
like well, let
yeah, I
me
was
just
just
finish this sentence. It because it looks just like '87,
Yeah.
where you had weak dollar, weak rates,
Mm.
and then there was a Plaza Accord. So is it going to take something like that? And there's going to be
Um,
no cooperation between central banks like there was then.
oh,
well.
they
Can I
talk
just
to
say
each other.
that
They
when it
talk to each other every other day, Dale. They talk to each other every other day. Huh?
Yeah, I
when
guess.
it
Yeah.
when wouldn't Powell just let Trump fall on his own sword to a
That's
certain
what he's
extent?
doing.
Well,
Yeah, I guess that's what he's doing.
And
I,
okay.
there must be something. Sorry, Blake. There must be something in the laws in the U.S. that defends the job of the Federal Reserve Governor, right? I mean, I I need to look it up. But it's probably need to. Trump will need to change the law, right, to get rid of Powell.
I think so, but no, I'm just saying that if you guys are looking for, I mean, you're talking theoretical, obviously. It's like who you ask the question like who's going to save the economy here, and I mean, if you're Powell, I mean, you're trying to do the right thing for what you feel is the right thing for the U.S. economy, but you see the markets floundering, you see what's happening, and if you know if you're Powell, you're probably like, I'm going to let you fall on your sword a little bit here. You know what I mean? I don't know if
Yeah.
he's going to be so apt to help out, any of Trump's agendas at this point in time.
You know how you have sometimes you just have to count on your charts and then the reasons come after the move. We figure it after the move. The dollar is very close to completing equality from here and now to here. It was 96. It's not that far away. I know some people that were looking for a low here, but uh, I think that there's going to be a reason to buy the dollar soon. I don't know what the catalyst is going to be,
Mm.
but we are reaching targets,
Oh yes.
which doesn't mean anything, I guess. If you're in a runaway, market event, financial crisis, then you could throw your charts away, I guess.
Hmm.
So I don't know. We're close, I think,
Yeah.
to a dollar low.
But then we need something to tell us that in this case to tell us. I mean, if we talk about the crisis and let's say crisis in the global term, as a global term, okay, it could be 1930, 1987, the 2000, 2001 tech crisis, GFC, crisis global in global terms. There has been something to stop it, right? Not so much after the tech bubble, by the way. I mean, because if you look back at the tech bubble, the dollar did get hit quite hard, yeah, afterwards. But there is going to be something needing to be done to stop it because you don't just have like a bond situation like the GFC. You don't just have a tech bubble. You don't have an equity bubble. You have
You have
something
an everything bubble.
Deeper than that, deeper than that. There's this, and we always have to measure our words because I mean it's easy to throw all those words in there, but there is a shock to the world order in trade and in stuff that
Yeah.
is happening, and it's not only on a global thing, but it does it on the inside as well because he's putting all those tariffs on, which makes it very hard for local entrepreneurs to bank on a reliable supply chain. They are looking at higher costs, so they are looking at how their business model is going to run. So I mean, there's a lot going on right now, and that is where my question is: who is going to stop it and how?
Yeah, I mean the banks still look terrible. They rallied right back to resistance.
Mm.
So I mean, if you're talking about what you're talking about, there's going to be a credit event. Okay, I think that's what people are also worried about. Are the spreads still blowing out
Well,
to new highs?
they
Credit spreads?
they are, but no, they are going. But there's still this in the financial world, let's say, this expectation of a big deregulation coming as well. So I don't think the banks are really suffering that much
Okay.
yet. Well, it all can change, of course, but they're not suffering that much yet because there's still this expectation of big deregulations coming, which is usually lining the bank's pockets. And but yeah, I mean, is just one of the
Bitcoin,
elements.
don't you think Bitcoin held up like a champ with risk off
I don't.
during this time frame? And look at where we are here. So maybe it's part of this is a weak dollar too. I mean, it's
Yeah,
a alternative currency, but this looks like it's getting ready to break out with everything that's going. So maybe everything's okay, but bonds. You know, eventually the market's not crashing, it's pulling back. The dollar's crashing,
mm,
gold is exploding,
mm,
but the asset class that most people pay attention to, people look at stocks and go, well, you know, we're not making new lows. That'll be their first observation. You know, at least it's not as bad as it was a couple weeks ago yet. Um, so, you know, dollar's bad, everything's good.
yeah.
But
Um,
but
mm.
bonds,
Yeah, and then still, if you look at the things globally, I mean, bonds, yeah, the yields are back up, but they are not like completely in
yeah.
a crisis mode yet, right? But there shouldn't be too much more bad news, I think, for it to become a real trust quarting moment. But it's still the dollar in a way, and
Yeah.
maybe yeah, maybe you can't get out of everything US because it's just one of those assets that people have been holding for 50, 70, 80 years and not wanting to let go everything. But yeah, I think for the time being, at least, it's looking quite bad. And tomorrow we will see. Tomorrow Europe comes back online. What
Okay.
they will do with their own euro.
Yeah. The weakness to me, because I started watching this stuff last night, it's still Aussie, comparatively. So it just finally cleared resistance while uptrends were in force here. So, I mean, if there's going to be anything counter trend, I think it might be here between here and 65, maybe get a pullback to 62. So that's your weak sister, if you want to fade anything. And Blake, so I know you had the whole weekend to think about what Kman's talking about. You think that the U.S. is in a confidence crisis, and can you think of anything that could be pulled out of the hat here? I know
No, I mean, what are we gonna do? I mean,
they
what's
put Navarro in the basement to try and stop that bleeding. Right, he's in the dungeon in the White House right now, and they're bringing out percent more than Navarro. He's not on TV anymore.
Yes, yes, but I don't think they can really do anything here. I mean, what are they going to do? How is Trump going to rebuild confidence now? we've gone past the point of no return, and that's the scary thing I think about the markets at this moment, is that you can see the crisis, as you call the crisis in confidence. I mean, the dollar index, is just telling us you got between what's happening in the bond market, what's happening in futures this morning, and what's happening in the dollar. You got the dollar index breaking down. You've got this is you said that their dollar could find some support. The flag pattern, Dale, reaches past this long-term trend line. I think it actually reaches all the way right through here.
96s, 96.
Yeah, it's about 96. I guess somewhere around the
Yeah,
96 level.
yeah, that's equality
Yeah, it would,
from that last to the left, the big break from the left.
this one right here.
Yeah.
So I guess that would probably be an ABCD. Let's see.
Jim Valentine is saying that we should be more bullish. And Jim, are you talking about equities? He's saying that it's a perfect king dollar just below parity, less restrictions on business and manufacturing. So, there are some people that are saying that we're setting up for a big rally. Even some of the bears are saying maybe the S&Ps can trade 4,500. But I'm talking guys like Felix Zulauf. Okay, you guys know who he is?
I do
Big
not.
big gold guy.
Okay.
Very respected gold guy. So he's saying between now and the fall we're going to base out. The low in April still could hold. So just keep an open mind that
Yeah, I mean that's the thing about where we're at right now. You've got to well, as a trader, right? You've got to expect or only, see what you have in front of you and trade what you have in front of you. And right now, this is, a complete and utter meltdown of the dollar. I mean, that's it. I mean, look at the euro. I actually sold my euros last night at 114. Where did I get out? I got out of my euro last night at 114.52. I closed out all of it. And that was literally 90 pips ago,
yeah,
from the
I know.
113s. I mean, did I expect this big of a breakout this morning, when I got up, especially during European hours and while everybody's celebrating Easter holiday? No, I didn't think we were going to break out. So as traders, we just got to take it as face value right now. And I will tell you this much, any dip to 115, you have anybody who's short the euro, they're going to want out. And so that is what we are going to be looking to trade. Forex Trader said, ask Santiago for the dollar with the milkshake theory. Look, I still believe that the dollar can rally. I think there's going to be a liquidity crisis soon. And when there is, I think the dollar is going to rip. That's why on the week ahead video, I said the euro, I'm going to be selling at 120, 119 to 120 if we see it. And matter of fact, I don't know if we're even going to reach all the way up there, but I'm going to be selling the dollar up here. Why wouldn't you? From a risk reward perspective, why wouldn't you sell it up here? That's exactly the price that I'm going to be looking at, is right up here against that resistance around the 120 level. But the fact of the matter is that's about 400 pips away from where we're currently are at. So as a trader, you got to think, okay, am I going to sit around and just watch this thing go another 400 pips? Or am I going to be trading it, to the long side as we get up there? And that's the thing about the euro, man. I see people, even in our chat room, people are fading the euro, and I'm like, you got to be careful. You've got to be careful here. I mean, Kman, we were talking about this in the chat room. I know you're kind of, passing on by through Easter weekend over there in the UK. I mean, is this the time to be fading the euro breakout?
Not before Europe walks in tomorrow, and that is purely on let's say tax failure, whatever. I mean, I'll just say it. I mean, I was long cable, and I've taken it off this morning, just because as a trader, and I'm constantly um, hopping between short and more medium-term trades, but got to take profits to keep your account happy. And you never
Yep.
know what Europe is going to do tomorrow morning. But I'm not counter trading it, that's for sure, because I haven't been counter trading really, apart from the exceptional dollar CAD or dollar rand ones. But all the rest on the majors, I'm just waiting for retracements in the dollar and sell it again. Because for as long as this goes on, I don't see the reason why to counter trade this. And as Dale said, if really the proverbial shit really hits the fan, I mean, you can throw your charts away, which is 90% true, but then not completely, because at one stage it's going to stabilize. We have seen that with the trust Kwarteng moment. At one point,
Yep.
something is going to happen to turn it around. But when, I mean, is the dollar going to lose another 10%? Is it going to lose another 0.5% and then turn around? We don't know. But for as long as I don't see why I should start to counter trade this, I'm not going to counter trade this.
Yeah, and that's the important thing is understanding when you need to stick when you want to stick your neck out, and when to stand aside. Technical levels become, just as you pointed out, they're like speed bumps in the market. One of the biggest lessons I learned trading with like the folks over at Gallos. And remember, these are like handpicked some of the best traders that I've ever traded with, but guys that came directly from bank desks that I traded with for several years. I mean, these guys always just ask me the question like, why can't it? Like, I'm like, oh my God, the euro is going up towards one. I'd be like right now, oh, the euro's heading up towards 120. I just can't see it. And they just ask the question like, why can't it go up there? And in this environment, you have to ask those questions like, why can't it? I mean, if you think about the environment and what we're in and how people are feeling. Remember, we've been talking about this for weeks, and now over the last week and a half, you're seeing this really big move away from dollars and US assets. And you don't know how big this wave can be before it stops. So, that's the way, you have to be approaching the market. And Jim, what are you talking about? It's starting to sound like MSNBC around here. There's no politics we're discussing at this point. This is all about markets and the environment we're in. This
See,
is
the
all
people
about,
are making the market political.
yeah, they
I'm telling
should.
you, I've never seen this in my career. So
Yeah.
if you're talking negative about the market, you're a Democrat. And if you're looking at and
Right.
and if you're looking at all the restructuring and how great it's going to be, which it may be, you're a Republican. But for both of these groups, we're crossing the Rubicon.
Right.
And
Yeah, this
and you
is
know, to
uncharted
get from one
territory.
side to the other, it's choppy waters, bro. Okay. I can see how, we could end up with, we needed to do this. It's how we did this, right? Isn't that the issue? Not that we did it, but the speed, the rapidity, was it thought through? Are we ready to accept some of the pain? Because there has been pain, Jim, right? I mean, a lot of people are underwater pretty good on their 401ks. So but it really shouldn't be political. It should be directional.
Yeah, it's directional, and it's what the way
Yeah,
we're looking at the market. I mean, it's,
but
that's all that really matters right
but
now.
that it isn't that the strangest thing in my lifetime. I never would have thought that if you're bullish the market, you're a Republican. If you're bearish the market, you're a Democrat.
I know.
That's never happened to me, and I've been both ways for many years in this business.
I tell you what, I live in a really, really
Yeah,
red state, and around a lot of red people, including my family.
yeah.
So the fact of the matter is, people are really, really scared. And I've talked to so many people that are like, "Oh shit, my retirement. I'm like not thinking like I'm they're thinking about wow, maybe things are going to change the direction of my life. And the fact of the matter is the markets are unstable right now. And look, they have every reason to be. And that's the
Yeah.
thing. And you can see it in the market really clearly if you take off your political lens here. You can see how the market is very, very unsettled. And that's the point. No matter what you think the longer term outcome is going to be, and everything's going to be okay. I'm sure everything's going to be fine. But right now, this is a shaken in confidence market, and you're seeing it clear as day, especially when you see the bond markets selling off. Again, let's point out what's happening in the 10-year. You can see what's happening there. Now yields are going up. When yields go up and the dollar goes down, that's a problem. I've been telling this to traders for 20 years. Like 20 years. Like if you see bonds go down, stocks go down, and the dollar go down, which is not something. Kman, can you ever remember a time we've ever seen that? I don't remember it in 30 years.
Well, I
Like
think I think the tech bubble was not far from this.
maybe it was, and I wasn't paying as attention to. I was trading,
Well, you had a
anything
bond bull
.com
market.
related.
You had a bond bull market then.
Yeah, yeah. Well, yeah, we had a bond bull market for 30 years. So it's hard to
Yeah.
see, prior to that. It's hard to see like,
Yeah.
what had happened at that moment in time,
There
but
was
maybe
a
it
place to
was.
hide besides gold back then.
Yeah. Yeah. So, yeah. Yeah, it's crazy. It's crazy. So, well, right now you're seeing bonds come down, you're seeing stocks come down, you're seeing the dollar come down, and this is a crisis situation that we're dealing with. So as traders, how do we do it? We have to continue to look at the dollar to the downside, and we have to look at equities, and equities look like they're gonna test 5,100. So 5,100 seems like a doable level, and that's the 50% retracement, by the way.
Yeah.
And
Okay. Yeah.
yeah, so of this bounce. So that
Right.
seems like very, very doable here in the coming
I'd buy that.
session.
I'd buy that dip being wrong under the low.
Or, I don't even think you have to really risk that much. I think you're just wrong below 5,100. So if you
Yeah.
get
In
close
that
to
area.
here,
Yeah.
that might be the level to be on the long side. But yeah, to me, it looks like equities we're gonna be revisiting this 4,800. And I've told you guys this, and mark my words, if we break 4,800, I don't care what the dollar is doing. And Dale, we talked about this on
Yeah.
Thursday here. Thursday or Friday, I guess it was Thursday. When or if the S&P breaks 4,800, I am going to be buying the dollar with both hands. So I don't care where the dollar is at either. I'm just going to be buying it because that's when the whole milkshake theory comes. That's when the liquidity crisis comes, and I've seen enough crashes in the market to know when you get there, you have to be long the dollar, and I think that's going to be where it's at. You guys, Jim, uh, Dale, I know you have an interview. Is he here?
No, this was going to be his second interview here, Garrett, and I don't see him, so
Okay.
maybe it didn't stick.
Okay.
Yeah.
K-Man, do you have any thoughts about where the dollar's at and where you'd be a buyer at this
A
point?
buyer of dollars? Whoa.
Yes, a buyer of dollars.
Not yet, but no, that's a good question. You know what? Assuming that it continues, right? I think you need to. I'm going to add another 7-8% to the euro dollar back at 123, 124, where this whole thing actually started from. Yeah. And then compare it with the dollar yen back around 130, 128. But I was talking with Ryan about this dollar yen, and we said like, okay, give me 135 and I'll be buying. But that was in the assumption that there would be some sense of normality
Stability.
coming back.
Yeah.
No normality, but we haven't even heard anything about the Japanese-US relations. So I mean, I thought there would be some kind of uh, smoother discussion around there that Japan was actually if and I'm I'm in full agreement, and I've been saying that as well. If Japan can't find a trade deal with the US, who will?
You know,
Right.
there is one fly in the ointment for the euro.
The euro.
Euro pound is not making new highs with this
I'm looking.
blast off.
I'm looking. Mm, I'm
It
looking.
looks more corrective,
Yeah, I'm
euro
looking to
pound
sell
right
it
here.
actually because I think sooner
Yeah,
or later, now we have this, as I said, this flight into the second biggest block from the biggest block. I mean, and big money is always going to look at, okay, this what's the next instrument where my money could be relatively safe if the biggest block fails. You always look at the next one, right? And then you go down the line. Um, so I think that's one of the reasons why the euro is beat. But I do think that sooner or later, euro in itself may kind of stabilize on crosses versus others, and euro sterling is still a candidate for me to come back down actually, but I don't know
that's so. I
when.
mean that's not that bullish euro if that happens.
No, give me back above that 87 and I'll sell it again, even
Okay.
even before.
We always have to look for the other case, right? The obvious case right now is the dollar bear case, but we still have to be alert of, what chinks in the armor, what
Mm-hmm.
market tells might be saying, whoa, just take it easy. Look at this. This last time euro was leading, euro pound was blasting to new highs. Now it's been, moving sideways, and now with a huge day like this, euro pound still looking corrective, like it could break, like Kman saying. So um, there's a little bit of at least a neutral argument on euro right here, right?
Yeah. Well, and that's the thing about the euro. It's like, please, like, give us 120. I like would love to be a seller up there. AJ asked about the Aussie and it being a proxy of China. We just hit the 50% retracement in the Aussie, but we've broken
Yeah,
out this pretty big resistance above 64 cents. So you got to be respectful of that. And that's the scary thing is when you see the Aussie breakout,
yeah,
you know this is just a dollar story right now. That's why it's like one of our guys in the chat room was asking about the dollar yen and it's not a dollar yen story. It's not
dollar
a yen
store.
story. You can see all the yen crosses are very, very flat. It's just a dollar story. Dollar yen's getting walloped. You can see all the dollar pairs are just getting smashed. So yeah, I mean if things ever if there's any like positive headlines that come out of China, the US China negotiations, you're going to see this Aussie rip higher. I think this Aussie is going to be, we got the big false breakdown. So I think we're going to be trading back at 66 cents. I
Yeah,
know Dale, you were talking about it, about shorting it. It is a weak sister right now, but again, this is all a dollar story at the moment.
yeah.
So
At 62 is my 62 to 250. I'd buy it. I
yeah, I
think it's
just
going to
don't.
be another false breakout
Yeah, I was just wondering if we're
short
gonna
term.
if we missed it. You know what I mean? That's the
Yeah.
thing.
Hey, you
I
know
w-
what? If we did, well, there'll be another entry to finesse. So, you know what? Uh, don't beat yourself up if you miss things. All of us here, we miss things all the time. So why don't you just own it? I'm going to miss things all the time. It's okay because there will be another setup.
Hey Dale, you want to see something funny? So
Yeah.
here's the chat room, and I scalped out of the dollar yen. I got short that this morning at one what was it? I entered at 140.99. I made like 5 pips,
Yeah.
and Nashaket says Blaker, you should have held the dollar yen. I'm like, hey, I don't live in shoulda woulda coulda world.
I
That was for
love
you,
that line.
Dale.
I
That
love
was for
that
you.
line.
Yeah, I don't live. It's
Uh,
like I shoulda, woulda, coulda done a lot of things too.
but you
And
don't know how many people go through that
oh yeah,
misery every time.
every time it's like, man, I'm trading what I see when I see it. That's it.
Yeah.
You that and if you want to know what I'm trading, you just come to the Forex Analytics chat room. There's Kman's trades.
Yeah.
Ryan's in here all day long too, and obviously a lot of other
Is
great
that
traders
deal
are in
still
here too.
going,
So
Blake?
what's that?
The deal, the
Oh yeah,
liberation.
we the liberation offer, it's not removed. Yeah, we're
Okay.
leaving it. We're leaving it we're leaving it. It's limited time, but we're leaving it on right now because let's do what we can, take advantage of the liberation offer.
It's the anti-tariff move that we are doing.
Anti-tariff. It's just helping out. It's just people are it's a little tougher right now for people. So we're gonna do our part.
Jim
So
Valentine, 7,200 SPX by August. You in that camp? That would surprise a lot of people, wouldn't it? Anyway, we'll see. Uh, that 4,900. I know a lot of people saying wave 5, 4,500. We'll see. Anyway, do the right thing today. This is one thing I do know. Do the right thing today and tomorrow takes care of itself. Right? Okay? You don't have to worry about being right 3 weeks from now. Do the right thing today and 3 weeks from now you'll be okay. So you want to wrap it, Blake?
yeah, I was just looking through some of
Oh,
Greg's
Greg's.
analysis here.
See,
Just on.
he's got a pretty important top due right here for a pretty good pullback.
Yeah, he thinks somewhere around the 115 level. Now, it is Easter Monday and
Yeah,
in most of Europe, so he's probably going to be updating this tomorrow as he does all of his charts. But
I'm
go
playing
ahead.
this count.
What's that?
I'm playing that count.
Are you? You're
Yeah,
gonna be shorting the euro up here?
yeah.
All
I
right.
maybe just a piece here and see what happens tomorrow. But Aussie's my preferred short because it didn't hurt me as much. I actually did it last night. So I'm trying the dollar for. I don't think this is the bottom of the dollar, but I think within a few 50 points or so, we could rally back to par or 101. Then have one more slam to 96, and that will complete the whole first wave down from 110 if you're bearish. If you're bullish, that completes a big ABC, and now it's off to the races in the dollar. Those are the two options down there, right?
There's always
And
there's always two options.
yeah, so we have our alternative count, alternate count. All right, well, everyone, have a good day. Get into the community. These are really, days where most people have not seen markets like this. So if you're in a community with people that have lived through 87, lived through the dot-com bubble, lived through the Great Recession in '08, lived through trading COVID, lived through trading 2023, and are still alive trading, there must be something to learn from these people. So get in there. I know there's dozens in the chat room that have had that experience. You can't learn it, but you can learn from the people that have been there. You could tell that Kman's been in the business for a while when he talks the way he does. Okay. So, pay the market or pay a buck to start learning from the community here. And that's a wrap. We'll have turnaround Tuesday. Tomorrow. Oh yeah, I have Larry. So Larry Tantarelli is going to be with us. It's going to be interesting to talk to Larry. He's a trend trader. I want to see if he had some drawdowns during this period
Yeah,
because
he's predominantly long, so it's gonna be
yeah,
interesting to see what sectors he's looking at right now.
Blake, I've done almost everything in this business, and I used to manage money for CTAs, and what I would look at for a CTA that I'd place money with was I'd look at not their performance, I'd look at their drawdowns. Okay. And I'd look at the ones that had less in drawdown periods and recovered rather than someone had, was up 200% and then gave back 40. So we'll
You know
see.
what's funny? You know what's funny
Uh,
that you did that? I mean, yeah, when I went to go work for Gelos, I tell you this quick story. He knew I was in a I was in a short gold position at the time, and this is 2015 or something like that, 2014, 2015. And as I was going to his office, I was down like 100 grand in this trade, and he knew I was down 100 grand. And I went to sit down with Mr. Gellos, and he's like, I know you're in a bad position, in your gold trade right now, but he's like, I'm more curious to see how you trade out of it.
yeah.
I'm more curious about your recovery. And so, the next week, I got out of my $100,000 loss and turned it into like, $50,000 win. And he hired me right after that. He's like, it's not about like, it's how you manage risk, but it's also how you can recover
Yeah.
from being down. So those are
Yeah.
those are really important when you're looking at, risk managers, those
Yeah.
two
The owner of
qualities.
RB&H or Refco, I'm not sure the firm, this guy Dittmer, used to let his floor traders trade into deficit positions. And that's when he knew whether or not he had a trader or not to see how they
That,
came back
that's
or if they
exactly
dug a
how I
bigger
started
hole.
in FX.
What's that?
That's exactly how I started in FX back in 1982.
Yeah.
The head of the desk, he gave me in those days we still had all the European currencies, you remember?
Yeah. Yeah.
And they had like a trade or so given by a client or a counterpart, I don't know, in dollar Dutch guilders, you remember?
Yeah.
And
Gilders, yes.
yeah, and the position was in loss, and he said like and I was like 18 years old, and he called me from the telex machine, and he said, sit down at the desk and try to get out of that one. And I managed, and I got and that's how I started trading and market
That,
making.
that's it.
Yeah.
It's how you recover. It's how you
Yeah.
recover.
It's
Yeah,
old school, man.
It's
And
old
it's, you know
that's the
what?
school.
window.
It's old school and it still is valid in the new school.
Absolutely.
It's
So,
valid in every school.
yeah.
Trading's trading. It's all back to you go back to raw and being a raw trader. And really we're all cut from the same cloth, but the cloth is hard to replicate. So,
Yeah.
you know,
Well,
there's
there is
certain
some
people that can do it.
polyester. There's some
What's it?
polyester out there too.
So
Anyway, anyway,
you guys
guys.
want to join a community with a bunch of traders? Come into Forex Analytics and come in our chat room, because this is where the magic happens. I'm in here 15 hours a day. We've got people like Leon, for example, that I've met in person, who came in from Seattle. He's been with me for nearly 20 years now. I post some great stuff, and I met, Leon took me out to dinner about 5 years ago, or so. So, in Phoenix, and you can see we just chat markets all day long. So if you want to be in a place where like-minded people are at, we'll see you there.
All right, everyone. So don't just count your pips, count your blessings, and have a great Monday. And we'll see what happens when Europe comes back. Don't get FOMO today. And we'll see everyone tomorrow. Adios. Thanks, Kay. Thank you, Blake.
Thanks,
Cheers,
guys.
amigo.
Good to have you here. And Kman, glad you could drop by today on Easter.
So see everybody.